The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. It is Fed Day. We got a decision, 2 p.m. Eastern Time today. Press conference from Chairman Powell, 2:30. We'll air that live right here on TFNN. And as we come into the trading day, we got markets slightly in the green. S&P is up by 13, or about 0.2%, trading at 56.82. NASDAQ 100, positive by about 0.3%, or 66 points in the green, trading at 19,768. Dow barely in the positive by 0.1%, or 39 points, just under 42,000. And we got the Russell positive by 0.1% as well. Bitcoin, a little bit of a bid from yesterday. We're up about $2,000, trading at 84,015. How about crude? We almost hit a 65 handle yesterday. Remarkable. 66.89, up 14 pennies for the price of light sweet crude. You jump over to yields and focus with Chairman Powell on the Fed today. And yeah, it's been quite an acceleration to start the year. You got the 10-year right now. We're sitting at 4.29. Okay, 4.29. We check it out on a daily. And it is remarkable. I was just reading. Yields, you're up 2%, something like that. Where's my Bloomberg article? Scrolling this way. Yeah, Treasury markets has returned 2.4% so far this year. Not bad, right? As the Fed's supposed to be cutting, maybe not. And as the headline says, investors look for the Fed's take on growth after that bond rally. You put it there. As the Journal puts it, they got a decision. And yeah, you talk about a start to the market, man, in terms of the year. 10-year, 4.28% right now. And then you jump over the dollar, quite a whirlwind rally and decline, up to 110 to start the year. And we're back at 103.61 right now. And we'll talk a little currencies. We'll talk a little commodities with our man Teddy Kegstad. He's coming up at 40 past the hour. Always a great interview. Check that one out. Coming up in about a half hour on the program. All right. Let's see what we got going on. And yeah, it's all going to be in focus. So you jump to the 10-year. There's your longer term. Okay. Take that one off. That's an old one. We're sitting, as I said, about 4.29 right now on the 10-year. And you look at the whole curve. All right, let's zoom it in. You get the 2-year at about 4.07, the 10-year at about 4.29. The 2-year, most heavily dependent on the Fed for obvious reasons, right? Short term, the Fed, their overnight lending rate. The 2-year influenced by that. 10-year influenced more on the growth and the economy. And we'll see what the Fed has to say about that as we come into their numbers at 2 o'clock. And then 2:30, Chairman Powell speaks. All right, Tesla. Quite a day yesterday for Tesla. We spent a little time on LiDAR yesterday. Always interesting, right? I find that stuff so fascinating. Science is fascinating. I'll tell you, so the astronauts came home yesterday. Thank goodness for them, man. 10 months in space. I was listening to it last night on Bloomberg as they're landing. I'm driving around, and I think they mentioned that they traveled like 100 million miles. Is that right? Can somebody back me up in the den on that? How far did those astronauts travel? I think it was like 120 million miles or something like that in their entirety. And I think that's because they were up there for 10 months, right? So they're probably calculating how far they traveled in the space station, maybe. I'm not sure, okay? But I said to myself, wait, it's 120 million miles, right? I think I'm right. So somebody, if I'm wrong, do you know how long it would take for the speed of light to travel that far? Almost 9 minutes. Yeah, the speed of light is 100-something. Let's see. 186,000 miles a second. That's what it is. But to travel 100 million miles, you're talking about 9 minutes. Imagine that. They went so far that light would take 9 minutes to reach how far they traveled. Remarkable. Light so fast. Nonetheless, LiDAR. Tesla catching a little bit of a bump today. You're up to 131. We were down to 231. You were down to 222 yesterday. BYD with their news yesterday that they can charge a car basically as quick as it takes to fill up a gas tank. Yeah, we'll see where we go from there. But S&Ps, we're up by 10. We're trading at 56.79. Let's jump around to some of the Magnificent Seven. Apple shares, we're going to be slightly in the positive today. NVIDIA shares trading lower yesterday. Volatility around their CEO speaking. And you talk about volatility, man. Absolutely remarkable how many shares outstanding on this equity. You trade up to 119 and boom, you give it all back by the closing bell. And we're getting a bid today again. NVIDIA up by about $2. You jump over to Amazon shares. Yeah, volatility everywhere on Amazon. Look at this run on Amazon. I'll tell you, folks, Amazon, okay? You're coming back to test this area we were at in July. But I can tell you, as somebody that has Amazon in the retirement account, okay, this was a heck of a run from 80 to 190. And I remember at 190 saying, man, there's got to be a room for a digestion here, right? Amazon just traded from 80 to 190. You just put a, what is that, 150% return over the period of about 16 months. And we've given it back. Probably in a little need for a consolidation here. But right at a critical area. As you can see, trading back to where we were in July. And yeah, Amazon. Wouldn't have seen a 180 handle, right? Think about this market. If I told you, and this is just a lesson to be learned, folks, never think that there's something that you think can't happen. There's outlier risks in this market. If I told you on February 4th, okay, that Amazon was going to see a 180 price point by next month, like a 180 handle, right? 189, 180 something. What would you have said? You say, oh, come on. It's not going to drop 20, 30% by then. Yeah, no, we just did it. We just dropped 20% on Amazon shares in the span of about 5 or 6 weeks. 20%. Whew, you talk about it, man. Meta shares down what? And you can see Meta, similar area, right? Amazon, you back July. Meta, you consolidated around this 600 price point on Meta from October all the way until the middle of January. And yeah, Meta shares, man, yesterday. Look at that drop, right? $25 drop right out of the gate. They're clawing it back a bit. It's tough to find a lot of strength in the stocks that have been leading this market. I know I'm just jumping around, but that's why I'm jumping around. It is tough to find a lot of strength in the stocks that have been leading this market. Excuse me, you jump over the NASDAQ 100. Now, here's what I'll say here. I was talking about yesterday, right? You had this dramatic drop-off in volume on Monday, the 17th, when you got a bid. You got to pay attention to that. Now, you probably would have liked to see a little bit more volume on the downside there, but that is not what you wanted on an equity on an index that's gotten slammed for the better part of a month on volume, and then one of the first, that's the biggest green bar we've had since this decline began, and you did it on the lightest volume you've had, right? It's an art, not a science, okay? If there was a simple equation, it would be solved, and computers could do it. And to a certain degree, they are, all right? They're tying in technical levels. You better believe they are. But when you see something like this, right, the market bouncing, and the first bounce you get is on no volume, I use the term often these days, but put those spikes up on your back, man, because that's a dicey one. Look at this volume we got in the last few weeks coming down at these lows. Remarkable. We're going to do it again today. It's Fed Day, folks. Stay tuned. Again, Teddy coming up at 40 past. We're coming back. We'll talk some equities. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets in the green, but giving it up a bit. S&Ps, we're going back to a 5-minute chart. Positive by single digits right now. We're positive by 9 NASDAQ 100, positive by 49 points, trading at 19,750. We'll see. We're coming into, of course, Fed Day, 2 p.m. decision. We might get some action on the open. You probably get a little bit of a lull as we come into the afternoon as you await Chairman Powell. The decision at 2 o'clock, and then him speaking, of course, at 2:30. As I mentioned, we'll air it here. Right here on TFNN. And yeah, it was 120 million miles. Man, it is remarkable. It would take light 9 minutes to travel as far as where these astronauts traveled. Now, you had a couple astronauts go up there in September of 2024 on SpaceX Falcon 9 rocket. And then you had the next 2 additional go up on the Boeing Starliner June 5th. They arrive on June 6th, and they've been there since. So the 2 that have been there the longest traveled 121 million miles during their mission, spent 286 days in space, and completed 4,576 orbits around the Earth. The other 2 that showed up a little later, 72 million miles, 171 days in space. And these guys, they've been up there for multiple, look how many days. So one of them has 3 flights, 608 days in space. Another one has 3 flights, 464 days in space. That's almost 2 full years in space Williams has spent. The thing I found most remarkable, though, is you think about what we can do as a human race. That much travel would take the speed of light 9 minutes to travel. That blew my mind the most, man. I don't think I've ever heard of human beings traveling a distance that would take light 9 minutes to travel. If you spend 10 months in space, they're flying, okay? No pun intended. Doing 4,500 orbits around the Earth, that might do it. But 9 minutes, right? Remarkable, man. That blew my mind. Nonetheless, they're back, and I'm sure they're happy, to say the least. Okay. Let's jump around some equities with some movement this morning. We jump over to GM. Excuse me, not GM. Yeah, I was talking GM yesterday. Before we jump away, if you didn't catch yesterday's program, folks, GM, they're going to sell 1 out of every 3 cars they sell this year is going to be an EV. That got my spikes up, man. I didn't mean to digress. But keep your eye on GM, man. A rally from 26 up to 61, but very difficult to see selling that many electric cars. Maybe they're making enough per vehicle, but EVs, man, it's a tough one. All right, General Mills. Yeah, this is a tough one, too. Look at this chart, man. You're going to break, boy, you break this level, right? We've been sitting at about $60. That's the low from 2023. Boy, you look at it, man. Everything else has rallied. No, not here. Yeah, so they lower the full-year guidance and top-line miss for the third quarter. Organic net sales are going to fall almost 2% in the full year. They got inventory headwinds, softer demand. Boy, that is a recipe for disaster, man. That's your weekly. You put it on a daily, and you're going to open at about $58. You got a low of 55 out here for General Mills. Goldman Sachs gets a downgrade. I know, it is interesting. I didn't even see if Tesla got a downgrade. I mean, all these downgrades coming out now, right? When were the companies, the Wall Street houses that were shorting these companies or selling? You put a sellout. So Goldman Sachs, Oppenheimer downgrades to perform from outperform. Lack of a clear rebound in merger and acquisitions activity. I mean, we're almost back to where we were trading at last July. You just traded off 20% from where we were in the span of a month, right? Always remarkable. All right, let's check out some of the airlines right now. Yeah, JetBlue's a tough one, man. Look at this chart. No matter where you go, we had a consolidation in 2022, 2023. You break below it. Looks like $750 is the ceiling right now, and about $5. You know, I talk about many times. You're looking at some of these trades, can always put you back against the wall. You're looking at getting in JetBlue. The dicey part here is who says you can't trade down to $450? You were just around there with volume. You have huge volume coming again in January. Where's the volume to the upside in this chart? Do you see it? I don't see it. There's not even a lot of upside. Look at the volume spikes, right? August, the spike lower. This is a weekly. January, they had an earnings event there. Earnings event in April. Every spike here has volume, even this acceleration when the market's trading lower. Something is broken on JetBlue, man. Be careful. Yeah, you talk about givebacks, man. Whew, from 70 to 45. Same thing, right? If I ever told you that Delta's at 70, hey, we're going to be pushing 40 next month. You'd say, oh, come on, 70 to 40 in a month? I'd say, yeah, it's going to be a dicey one. The market can go further than you think, faster than you think every time, folks. It can do it. Doesn't mean it's going to happen. Look at these airlines, though. And where are you going to stop? Look at the volume on this bar in Delta. Seems like we got negative prices coming at you, man, even after this slide. You know, where does the pain stop when you got a slide going like this and the rally has been so quick? Basil always talks about kind of the symmetrical mirror image, you know, and that is a nice bell formation. That brings you back down to $40. And boy, United goes from 40 to 120, and we're back to 70 in a heartbeat. My goodness. I didn't even realize. I mean, it's been so quick. I look away from the airlines for 5 or 7 days, and you've almost given it all back. American goes from 9 to a high of 19.10, and we're back to $11. My goodness. Always got to protect yourself, especially in a market like this, folks. The rallies have been fantastical. Make sure you protect yourself. Didn't think that the airlines could turn around that fast. I knew it was kind of a remarkable run. A pullback might be expected. And boy, these fake outs, you get a pullback and then everyone says, oh, okay, that wasn't a real pullback. And then the real one begins, right? All right, we jump over to the dollar. Yeah, so on a weekly basis, right, there's no strength there just yet. You get the huge acceleration the week of March 3rd. The market's trading lower. On a daily basis, we're just chopping around. The lower level, about 103.30, 103.20. We've got a low out here of 103.197, 103.221. We're chopping around. We're at 103.638 as we got the 10-year right now. Coming into Fed Day, sitting at about 4.3%. As I've been talking, a little bit of lower price, higher yield. Stay tuned, folks. We're coming back for the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We come into the opening bell, and markets trade a bit higher coming into the opening bell. S&P's now up by 19 points. Yeah, that's a 15-minute chart. You look at the run we just had, right? A little bit of a run-up in the final few minutes coming into the opening bell. That's a minute bar, and you see the run at the open as we get a little bit of a pop getting ready for Chairman Powell at 2:30 p.m. today. NASDAQ 100 up 100 points right now, 19,801. Dow up an even 100 points as well, trending up 0.2% at 42,000. The Russell barely in the positive right now, and we haven't talked about gold yet. How about gold having a moment, man, to put it lightly? 3,050. There it is, man. That was one of the next stops on there, 3,050. Let's remove that one. Remove that one. You get a nice breakout of this consolidation. You're in that consolidation from about February 5th, chopping around 2,900. You break out March 13th. And as I was talking about on the program yesterday, man, price and volume, folks. You see a consolidation like that, okay? You want to see a breakaway with wide price spread and volume, and look at the breakout we got on March 13th. Okay, you break out of that consolidation, you hit 3,000 for the first time ever, you trade 236,000 contracts. That's a breakaway. Doesn't mean we can't come back and retest, maybe 2,960, maybe 3,000, all right? But that is a sign of strength, man. Gold, relentlessly strong right now. You jump over to silver, still not up above where we were back in October at 35.07. Just can't get the acceleration that gold can right now, right? You've been pushing these levels since May of last year when you hit 32.75, just kind of chopping around that number. You get a little bit of a bid from there. The one thing I will say about silver, all right, look at this trend in volume, not what you want to see. Look at this trend, right? Basically, since we've accelerated above $26, we have had declining volume as you've been consolidating. That's okay if we get a sign of strength that comes with it. We haven't seen that sign of strength. Some of the silver stocks are relentlessly strong right now. Look at this run at First Majestic. Okay, now, if you're in First Majestic, watch out for $8. Okay, they're a metals producer. The one thing I'll say is look at the volume that's come in, right? Look at the difference between some of these silver equities and silver. Now, silver can catch up. Maybe the volume's going to the equities first. Maybe the metal will catch up secondary, right? Maybe the equities are going to lead the metal in silver because, boy, that was a nice week last week. You did 125 million shares on First Majestic. That's a sign of strength. You got $8 up here, but to see quite an acceleration, right? From $5 to $7 over the period of this month alone for a company like First Majestic. Endeavor Silver. Yeah, look at the volume coming into this equity, right? Last week, you break away. You trade from 359 to 485, and you do 60 million shares last week. Again, though, bumping up against the highs we've had in October. Okay, we got some work to do a little bit. And Pan American might be the strongest silver equity in the gold report right now, folks. Look at this run. You compare Pan American, you back it up to October. We're actually above where we were. October, you had 26.05. Pan American actually breaking back within the channel line. We're at 26.37. You made it as high as 27.47 this week so far. But yeah, how about that chart, right? For a breakout for Pan American. Some of the other gold equities, look at Harmony, breaking above the highs that we had in February and in October. Hecla, they had volume, but Hecla's a different story right now. That's a nice acceleration. They did it on volume as well. Look at the volume coming into some of these silver stocks, right? If you haven't checked out the gold report, folks, new issue is out Monday, new updates every week and throughout the week when warranted. But look at this volume ramp up, right? That's what you like to see, especially if it continues and we break on the upside. We got some work to do, though, for Hecla. Yeah, you're not even close to the highs of 768. So it's interesting when you compare some of these equities, right? You look at Hecla, Pan American, Endeavor, First Majestic for the silver producers out there. All right, some of the other ones, though. Check this one out. New Gold. If you're looking gold, we're talking a little gold and silver. Look at this volume, right? Same deal. Remarkable volume coming into these equities right now. New Gold was trading at almost $1 last February. You're pushing 350 right now. You're above where we were in September, and you're actually breaking back within that channel line potentially. You tried to get back in there. You're trying to get back in there again, but we're doing it on volume. AEM's another strong one, man. Look at this. Again, last week, biggest volume weekly bar that we have going back, at least this year. Going back to, might have even eclipsed 16.1, 15. Yeah, that's the most volume that we've had in this equity going back to last April. That's how you like to see it break back within that channel, man. No matter what, that's how you like to see strength come into an equity with volume you haven't seen in months. Breaking highs, Agnico Eagle pushing 104. You were at almost $45. That's not slowing down, folks. All right, that's not slowing down. I think gold's making a run to 33.50. I think that's the stop. It's not slowing. And where I get that from is a nice 1-to-1 A to B expansion. From the run you had last February, you get a little bit of a pullback. And I think we might do it again. And that 1-to-1 is going to bring you somewhere around 33.50 right now. And we'll see. A lot of things going on in the world, in the market, of course, on Fed Day especially. But yeah, gold not slowing down, man. All right, let's see how some of yesterday's movers and shakers are opening today. We got NVIDIA shares up by 1% right now. You jump over to Tesla shares. Excuse me. They catch a bid up by 3.1% right now. Apple gets a bid. There you go, up 1.25%. Amazon shares down about 0.3% right now. Google up by 0.6%. Meta shares down by 0.3%. Streamers. Netflix shares, quite an acceleration from Thursday's low, 887 to 967. You put this on a daily, that's always a nice bounce, man. Look where we're bouncing. Put that channel on your chart if you're trading Netflix, folks. It goes all the way back to the lows of 2022. Okay, and what have we done now? We break above it. And again, how do you break out of it? You break out with some real momentum, man, right? You get earnings in October. You come out, you test it, you break higher, you come back, you test it, you break higher. We've tested it again. Netflix, remarkably strong. Warner Brothers, well, you got some volume at the top there on their earnings. Up to 12, we're back to 10.45, but as you see, not a different. Jump over to Paramount, it's a tough one. Yeah. I mean, you do have some nice volume. March 7th, up to 12.50 on Paramount shares. Get some nice volume on February 14th. Yeah, the volume spikes are to the upside right now. Anytime you're getting volume in Paramount, they're to the upside. You go a little big picture. That's a tough one, though, right? Whew. A monthly just looks broken. A 3-year weekly. That's a dicey one. I might wait for a pullback, maybe $10. You're looking to get in Paramount, $10, man. Maybe just above $10. You give yourself a little bit of room. We were down to a low earlier this year of $10.16. We're sitting at $11.68 right now for Paramount shares. We check back in on crude. Critical area on crude. I don't have to tell you, right? You don't have to be a master technician. We're approaching some critical technical areas. We're at 66.61 for the price of light sweet crude, down about 13 pennies right now. And you jump over to the dollar as we're going to take a quick break, and then we're coming back with our man Teddy Kegstad, folks. Always a great segment. Dollar catching a little bit of a bid in the last few minutes. We're at 103.655. Stay tuned. We're coming back with Teddy Kegstad. We'll talk some currencies. We'll talk some commodities. We'll talk some markets. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets in the green, but giving it up a bit. NASDAQ 100, we just dropped about 100 points from where we were just after the opening bell. Those are minute bars just to show you. Market dropping off a bit. S&Ps right now, there's a lot of volatility. Up to 56.92, back to 56.58. But right now, we're going to talk a little currencies and commodities. We're going to jump over to our man, Teddy Kegstad. Folks, if you haven't checked out Teddy's outstanding Tiger Forex report, head on over and check it out right now under the newsletter tab, right at TFNN.com. You can subscribe. It's only $97 a month, and it comes with a 30-day money-back guarantee. Check it out, folks. No risk, all reward there. Teddy Kegstad, good morning.
Good morning, Tommy.
So we got quite a market across the board here, and we got an important day with Fed Day. And what are you watching in this market, Teddy? We could start in many areas, but what are we watching on Fed Day?
It's Fed Day, so not very much.
Right.
Especially after, a couple hours from now, it's going to really dry up until the 1:15, mark when when the meeting ends. So my expectations aren't very much out of this meeting. So I mean, the one thing that would be, I would think, if they're going to do any easing over the next, say, 4 to 6 months, since there isn't a meeting until May. It might be a good idea to do a quarter point cut today. I don't see it happening, but it probably would be one of the smarter things to do, and then see what happens because then you have, no matter what, 2 months where they're not meeting anyhow. So, and see how that impacts the market, and see, we have a lot of good numbers that have come out, and we also have numbers that are just the opposite. So I would think that would be that would be really healthy for us as traders and for the economy and for the market. I don't believe that's what they're going to do. So I think once they have the meetings over, trade will resume tomorrow. I see a little bit of dollar strength in the short run right now. So obviously, it's coming out today. I mean, the main reason is we've been pretty much sideways riding the lows, and we're due for a little correction. I'm not saying that there's going to be a lot of dollar strength, but I think that it's really going to come down to if there isn't a rate cut, okay, then I think you're going to probably see a nice, especially extended leg higher. Then I think you're going to see a rally in the dollar. So if they do cut today, then you may see a little spike high rally today, and then see the market start to pound the lows a little bit going into the rest of the week, into the weekend. Yeah. But like I said, I don't really think they're going to make that move. So, but I think that there's a good chance for dollar strength to come in for at least, I would say, a week or two. I think that as far as like pushing the odds of pushing our lows right now, even if we were to sell off, I don't see us having that drastic of a sell off. And here's my key reasoning why on that one is that let's say that we don't have a rate cut. The U.S. dollar-yen relationship, that's in a nice correction. Okay, so if that extends, as well as you have the weakness in the Australian dollar and the New Zealand, if that returns especially, remember we had before, where a couple months ago I said we were having divergence now in the currencies where the dollar index is going to become a very hard guide as far as where the broad base of currencies are going. And I think that some of that divergence that we've been experiencing over the past couple of months is going to stop for about probably a month or two, into basically, I would think, the next Fed meeting after today. So I think you could see a nice little trend, which if we do get a rally going on, and start trading higher in the dollar index, that means you're going to see dollar strength across the board against most currencies, which could very likely happen just because there's, once again, this gets back to my whole thing is the dollar strength is no longer so much because of what's going on here. It's about what's going on in these other countries. So, and that's reflective of how beaten down the Aussie and the New Zealand have been. And they've had a nice little bounce, and that's just all it was a corrective rally. And now they're starting to get weak again. And if that accelerates, like I said, and also with the pound too, it's had a nice rally going on. I think that's coming to an end as well. As far as for the UK, they have a lot of issues that it's going to impact their currency over the next couple of months, and the same with the same thing with the euro as well. And that's where I'm not a dollar bull per se. I just think that I'm very negative most of the other economies around the world, and unless I see some sort of big turnaround where they start to shore up things, and especially like I could see especially the EU start another wave of quantitative easing, and if they start doing that, that's really going to crush their economy, So we'll see what happens. I don't have a crystal ball. I can't predict what other nations are going to do, but especially considering the way they seem to be trending right now, and the voicing that I'm hearing, the narrative that's going on, that seems to be the direction they're going to head in. And if that's the case, you have to use that. Those fundamental factors become a big part of the currency trends. And I do believe that we are going to have trends, but they're not going to start until this summer. And then we're going to start to see some real movement in these currencies, whether it's, against the dollar or, or helps the dollar. You know what I mean? We'll find out then. So, and then, I think like crude too, like interestingly enough, yields have been, slightly lower to sideways, while crude has been sideways to lower, and that definitely helped the U.S. dollar yen trade for a while. But now you've had a nice spike high, like we hit the, we went back to our one target level that was a big key area at 150 in the yen, which is also the critical level for the BOJ, and spiking high on that today. That's going against where it should be going right now. It should, so we'll see what happens with that. It's just because it technically should be going back towards where the lows are, not going back to this. So if this is just a correction, it should stop. If that doesn't stop, the yen is one of the major currencies in the dollar index. So if that gets back, let's say the yen gets back up to 153, 154, or even 155 as an extreme, okay? And then you also have the Aussie and the New Zealand. Let's say they just go back to their lows, okay? Unless the euro and the pound have some excessive rally against the dollar, being positive, their currencies, I see the dollar, then you're going to see a nice trend in the dollar index where you could see, like right now, the dollar index has been bouncing around our downside target level. We could get back up to the 105 even area, that's a nice little correction for the dollar. I mean, you got to remember, the dollar has been trading lower since the first, second week in January. So, and right now we're riding the lows. So I'm not trying, I'm not trying to pick a bottom here. But, I said this already last week that we're due for a corrective rally, to the upside, So, and that's not, like I said, not being positive dollar. It's just a technical thing. It just normally happens. We're really pushing. Once again, the odds of us pushing the lows right now are just really nothing. There's nothing there to really push that unless some new, something new comes out in the news, some new fundamental, right? So
sure. And then crude, $66. I tell you what, we're coming to a break. Can you hang with us for one more segment?
Sure.
All right, we'll be right back with Teddy, folks. We got a little bit more to cover. We got S&P's up by 23 right now. NASDAQ 100 up by 86. We're coming back with Teddy. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You got markets accelerating a bit to the upside. S&P's up by 33 now. We're above 5,700 at 5,702. NASDAQ 100, we're up by about 0.6%, 19,833. And we're talking to our man Teddy Kegstad. And that was great takes, Teddy. And I wanted to jump into crude oil a bit. And I love how you compare the currencies because it's interesting. You come from equities, of course, but currencies, it's always great because I'm always looking at the dollar. And I love the way you wrap your brain around it in terms of it's not always just about the dollar. It's about the dollar compared to every other currency because that's how currencies trade in terms of pairings, which is so cool. And crude ties into that. I find myself looking at crude a lot. We've been talking about it. It seems like we got our back really against the wall here, man. I put it up technically, as a trader, a short-term trader, sometimes swing trader. I like these trades when you get your back against the wall. Crude trading at $66. What do you think about the action? I know you got it potentially in a little bit of a corrective rally. I always check out the Tiger Forex report. But, boy, if I'm looking at this thing, how do you trade below this level when, boy, you got some technical support here, and we're talking about relatively cheap prices? What do you think of crude at right now, 66.66 as I talk?
Well, you know what, to be quite honest with you, I liked the spike high yesterday. I think that's a key level. I liked it. Is like if we hold a trade below that high, I think we're going to actually trend lower, and I see oil being around $3 lower by Easter. So if not beforehand. So now I'm not looking for an excessive sell-off, but I'm saying I think probably with the way this trend has been snaking along, unless we can get above yesterday's high and especially close above that and sustain a trade above that, well then maybe we get a correction that maybe pushes 70, but I don't see it getting above 70 by any means. I think even if we hit 70, then you're going to see a lot of selling. I think that would just be a profit-taking area. But I don't even think we're going to get there. I think yesterday's high hit the mark, and we're going to trend lower to 60.
And that was quite a trade lower yesterday, man. 68.50, folks. That high yesterday. Teddy, thank you so much, man. So much great information. Look forward to talking to you next week. Have a great week, man.
Take care.
Take care. Folks, check out that Tiger Forex report. Teddy's got a couple great webinars under the services tab as well. Thanks so much, folks. Stay tuned for Basil, and I'm coming back this afternoon. I'm hosting